Hey guys, how's it going? Quick question for you. Have you ever been in a real estate escrow getting ready to close on your dream home only to find out that you have extra thousands and thousands of dollars of costs associated with the home that need to be paid before you can move in? Well, you guys really need to pay attention to today's message. I'm going to be going over closing costs, what they are, what the average cost and fees are associated with that. And if you stick around long enough, how to reduce closing costs on your next real estate transaction. Just again, guys, my name is Eric Loya with Father's Plan Realty. I am a licensed California broker and mortgage lender here in the Southern California district, or area district, whatever you want to call it. So I want to get right into it, guys. I want to share the good stuff, the good information I have for you. I'm going to go ahead and share my screen here, bring on good old-fashioned PowerPoint. It'll only take a few minutes, but I think it's important that you guys understand this before you get into a transaction rather than having it come up on you. So what are closing costs? Let's just kind of get into it. What do you need to know about them? Closing costs, a little tip for you, are actually tied into the rate, or they can be. And providing closing costs is something that I can do for you as well as a lender here in Southern California. So let's jump into it. What do you need to know? All right, so closing costs are basically the fees and charges incurred at the end of a real estate transaction in excess of the purchase price. So this is more than your 3.5 or 5 or 10 or 20% down payment. A lot of people don't really account for this when they're buying a home, but it's really important to know this. Typically, they can be anywhere from 2 to 4% of the purchase price. So if we're looking at a $500,000 home in Southern California, it could be close to 10 grand for closing costs. And a lot of people, they go in with the plan to put X amount percent down and nothing more than that. So understand that. And closing costs, believe it or not, can actually be paid by the buyer, which they're supposed to. The seller can actually issue a credit. We'll get into that a little later, or it can be a combination of the two. All right, so some of the costs in a closing cost include lender, notary fees, attorney fees, escrow fees, a natural hazard report, HOA fees if you're buying a condo or a townhome, home insurance, title insurance, pest inspections, appraisals, home inspections, property taxes, transfer taxes. It goes on and on and on, guys. The good news, you can find it all on one document. It's called the loan estimate. When you submit an application for pre-approval with a lender, within 3 days, that lender is supposed to provide you with a one-page document called the loan estimate. All closing costs are itemized line by line in that loan estimate, and you can use that to compare with one lender versus another. Again, that document is through escrow. As you go through escrow, you'll get another document called the closing disclosure, or the CD. This is a couple days before you close. Really what it's meant to do is to compare the costs originally proposed to you by the lender, and then again, what may have changed, maybe the interest rate change if you did not lock it in. So some of the fees, the prepaids, if you're closing in the beginning of the month versus the end of the month, some of them may change a little bit, but for the most part, you should have similar costs from the loan estimate to the closing disclosure when you are comparing or dissecting closing costs. Now, one of the things that people don't understand is how can you actually reduce closing costs? Well, number one is shopping lenders. So you don't want to go to too many lenders, but one or two, 2 or 3. I would do no more than 3. Because it will start to affect your credit if you are going to multiple lenders. So talking to them, having them compete for your business is a good spot to start. Also, believe it or not, scheduling an end of the month closing. By doing that, that may help cut down on prepaid interest that you have to put into a separate account upon closing. You can ask the seller to assist. So through that purchase price, you can pay a little bit more if you believe the home value is there, and ask the seller, hey, Mr. Seller, can you help contribute 1 or 2% of this price to my closing costs because I need help, you just need help with extra down payment or those extra costs. It doesn't hurt to ask the seller either. That you'd be surprised how often that happens versus not. And then lastly, what you can do is you can take those closing costs and you can roll it into the cost of the mortgage. So all of those fees that are supposed to come out of pocket upon closing get rolled into the 30-year mortgage, and those costs are basically dissected over those 30 years. So, you might see a little bit of a higher rate to account for those costs going in towards the loan. So that's another thing too, is you can have your lender completely take those costs from you as well. That's basically the gist of it, guys. Closing costs aren't really too tough to understand, but it's very important that you take those into consideration when you're buying your next home. If you have any questions, if you want to get pre-approved for a mortgage, go ahead and give me a call, shoot me a direct message, and I look forward to working with you soon. Have a good day.